Well, losses in Astral's poultry segment amounted to 109 million rand, that due to higher feed costs, that with grains from marginal rise in poultry selling prices providing little respite. Gugulethu Mfupi caught up with CEO Chris Gutter on the company's earnings and the tough economic conditions.
I think typical, one of the toughest trading periods for the industry as a whole, and Astral always never going to escape this one. So the poultry is the bad story in our results. It started all late last year with the increase in the feed and the cost on the back of high maize prices and soya prices, together with higher level of imports, just created the perfect storm, and we were not in a position to recover our input costs to the same extent than we would have liked to. So interim results for the poultry industry showed that we were down, but the full year is an indication that there was somewhat of a recovery in the second half of the year, and offset by slightly lower input cost and slightly better pricing.
You mentioned that there's an uptick in your input costs with regard to the maize prices. What are you doing right there?
Look, first of all, I think the early part of our reporting period was negatively impacted by the worst drought in the United States. They call it the worst drought in 50 years. And then we had a fairly good local crop coming up, and then a drought in our northwest, which again reduced our crop. So, but then currently the US current crop is looking very good, above the trend line yields there, and the price at a 4-time low at about 420 cents a bushel. But then again, we would have liked to participate in that lower price, but then the rand is going against us. So our local maize currently slightly more expensive in world terms than what it should be.
Let's also touch on the import tariffs that were recently imposed by the Minister of Trade and Industry. He mentioned that he will impose the import tariffs. I think that's on the Brazilian chicken imports, not on the imports on the EU. Will this have a positive impact on your numbers, maybe in the long term?
First of all, it is a positive move from government. I think a lot of interaction between the industry and government with a positive outcome, slightly more understanding between the two parties. However, on the commercial part, we don't believe it's going to have a significant impact, because that duty is imposed on countries and volume that only make up approximately 10% of all the volumes that's imported into this country. So a positive move, but it's not going to have a significant impact on the trade environment in South Africa, as the majority of imports currently originates from the EU, which is based on a zero trade tariff.
I also understand that recent labour unrest at one of your facilities cost the business as much as 37 million rand. How concerned are you about the current labour strife in the country?
It's a big concern, and should remain a big concern for business and for government and for the labour force, because that's the kind of thing that will create a bigger gap between business and labour and between government and business. So it's critical that we have an indaba about this and resolve it. The expectation gap is simply just too big. And this is the kind of thing that will force business to go the way or the route of mechanization or more industrialization and lower hand labor content to the business. That will not be good for this country. So I think we need to create an understanding between what is affordable and what the needs and wants of people is. However, this is a typical African situation, and I'm sure we will